Now we reach the point of the conversation, Mike, that is my favorite part, which you come to me every episode with three different projects that have gone through a series of funding. And today we're going to start with, at the time of this recording, looks like Bitcoin is currently at 67,000. But at one point we did touch 73,000 and came back down. And a lot of that is due to some of the uncertainty of the elections. Although the poly markets is saying that Trump is there's a 60% chance of him winning. The reality is we still don't know, and some of that uncertainty is being played into the actual market. So to discuss what's going to happen with Bitcoin post-elections and with the rest of the crypto market, I'm joined by Mike. Together we are Mick and Mike. So we're going to go over what's going to happen on the crypto side. We're going to go over the funding rounds as always, and a little bit of news. Maybe Kraken is following Coinbase's footsteps. So with all that said, Mike, what are your thoughts about the market? Let's first say if Trump wins,
Right.
and then we'll have another scenario if Kamala wins.
All right. This is my short-term and long-term prediction under both of those scenarios, right? So if Trump wins, I think you're going to see like a massive, massive jump in price in Bitcoin and a lot of Bitcoin first. It's gonna, it's gonna take a nice jump, but then I think I've said before that both candidates are going to gravitate towards the middle, where Trump has made all these promises, right? He's made all these promises to have like a Bitcoin reserve on the government's balance sheet, and he's doing this world liberty, and he's getting very involved. He made all these great promises, so I think Bitcoin's going to take that short-term bump, but over time, I see a lot of the promises that he made not coming to fruition. So I think as that happens, the price will kind of normalize a little bit. All right, that's my take. Now with Kamala wins. I think we see in the short term people are going to be a bit more bearish. The price is going to drop. The price of Bitcoin is going to drop down a little bit due to that bearishness. But I think that over the long term, we're going to see that she's going to certainly be friendlier to crypto than the current administration, and Gary Gensler is going to be done, and we're going to have more education. I think a crypto friendlier SEC commissioner, and then it'll eventually recover. So now net, I don't know, net I still think probably a Trump win is going to be better for crypto, but that's how I see it kind of diverging and then normalizing towards the middle.
I think that I'm not 100% sure that Trump will be able to hold all of those promises. I hope he can, but I do think that in both instances there is going to be an overreaction in one way or another in the short term. I do think that for like the altcoin market, that Trump is more likely. I think he's better just because it appears as though the Republicans tend to be a little bit more like hands off from a regulatory perspective. Not to say that they're not going to, focus on regulation, but I think that Bitcoin, Ethereum will do better than the rest of the market under a Kamala administration. And I think under a Trump administration, I think Bitcoin and Ethereum could do just as well. But then you could probably also add the altcoin market. So I think the biggest difference here is whether or not the altcoins are going to be successful or not. And I think a lot of that depends on what's going to happen, whether it's Trump or Kamala. But what's interesting that you just said was that you think that Gary Gensler would be gone under a Kamala Harris administration.
100%. 100%. Under either administration, right? There's no doubt he's gone obviously under Trump, but I think he's absolutely gone under a Kamala, and I think that will be very bullish. I think just in general, I don't know who's kind of playing marionette behind the scenes, but like he's obviously public enemy number one for crypto, and I feel extremely confident he is absolutely gone. Under both administrations.
Well, I know you're in the DC area, so maybe there's something that the rest of us don't.
No, I don't. there's no insider information here. Just a strong feeling about that.
Well, you know who else has a strong feeling? That is definitely Michael Saylor of Microstrategy. He doesn't care what direction, like who's in the White House, what direction Bitcoin's going. He is buying regardless. And looks like he's raising $42 billion to buy more Bitcoin. I mean, at some point, you got to wonder, like, what exactly is motivating him here? Like, he just keeps buying and buying Bitcoin. And it's almost like a race between MicroStrategy and BlackRock at this point.
Yeah, who's the better ETF, right? Like, there's a good argument there, right? That MicroStrategy is actually an ETF. So, yeah.
People buy MicroStrategy to essentially, have a more aggressive portfolio, like playing into the whole Bitcoin narrative.
Yep.
And along those lines, like if you dive deeper into the Web3 world, again, people don't really pay too much attention to what's happening in the elections. You're seeing moves like these, right? Which you have to be bullish regardless. So Stripe's $1.1 billion acquisition target bridge buys Web3 wallet platform Triangle. And from what I see here, Mike, is that you're essentially are able to create your own stablecoin and use it for like pretty much any project. Is am I understanding this correctly?
So Bridge, it essentially allows like anyone to integrate stablecoin capabilities into their products, right? It also allows them to kind of to issue their own stablecoins. But I think the key thing is like is kind of like how Stripe was able to really streamline the process of integrating kind of any payments into your app or e-commerce site. Bridge allows anyone to do that with stable coins, with those crypto rails into their product, right? So obviously accepting payments is the biggest use case there. So it's just a perfect really like marriage with Stripe, and like if you take it just kind of proves out a couple things, right? One, like the stable coins is the killer use case for crypto right now, right? It's not sexy. It's not like crypto and AI, like crazy shit being built. It is just this thing that people need to send money to each other, to give access to stable currency across the world, cross-border payments. So massive use case, massive market. And the bridge was only around for 2.5 years before they got bought by Stripe for $1.1 billion. That's pretty awesome. It's the largest crypto acquisition to date, and just kind of goes to show that and this Stripe dabbled in crypto a little bit, and then they backed off. They didn't really see they didn't really see the value, and now they just went huge into crypto. So when you have one of the largest private companies that and payment processors in the world kind of picking up a crypto company, that's a pretty big deal. That's huge for our industry.
Yeah, I mean, I imagine with Stripe getting on board, I mean, it's just another way for us to onboard new users, right? The traditional Web2 users. And I think
Yep.
something else that is also interesting in terms of onboarding new users is, I saw this that came through is that Kraken chooses Optimism for its new layer two network. And for those that don't know, Base is also utilizing Optimism. And so we talked about this before, Mike, that the OP stack seems to be very enticing for a lot of these exchanges that are trying to build out their layer twos. But it looks like they're following Coinbase's footsteps. Kraken is.
Yeah, there's a few layers to the story that are pretty interesting. One, and we talked a little bit about kind of every DApp or popular DApp or application or exchange having their own L2, right? You see a lot of even centralized or decentralized, right? You talked about Coinbase with Base, Kraken with Ink. I think some of the other centralized exchanges, obviously Binance has B chain and those L1s, but and Uniswap has Unichain. So you've got this like everyone wants to kind of own their own stack, and I think that's a movement that we're going to continue to see. Just these these popular apps will just be able to control fees, be able to onboard new people, and I think that's definitely a good thing. Another kind of interesting fact of this was that the Optimism Foundation actually paid a ton of OP or dedicated a ton of OP tokens to Kraken for building on their chain. So it was 25 million OP tokens they allocated to this. I think they originally signed a deal earlier this year, and I think they were worth like $100 million earlier, but more recently it was like 42.5 million. So it's this kind of like, yeah, we talked about like OP, Optimism getting a ton of traction and getting a lot of people to build on their chain. They paying people to build on their chain. It's there's obviously a value there, right? Because they will get sequencer fees from these other L2s, and I don't know what the amount that Base has paid them, but Base is like printing money, so Optimism is getting a piece of that. So there's obviously value there, but yeah, like that's the grants will get paid out over time. So it's not just 25 million OP tokens like handed over. But that's a pay to play kind of interesting strategy there. So yeah, and another layer to it is that Polygon was paying a lot of like traditional companies like I think like DraftKings and Disney and Starbucks and Nike to do these kind of partnerships, and the the chief growth officer at Polygon was cutting these deals, and he's now the chief growth officer at OP. So bringing that pay to pay strategy over from Polygon to Optimism is kind of interesting another layer to the story.
Yeah, I love seeing these partnership announcements when there's like traditional companies jumping in. We all get excited, right? Well, us that work in crypto, that invest in crypto, we get all excited. But I have yet to see anything that actually has like tangible traction, like when you go out into the real world to actually like see it play out. I have yet to see that, and that's I don't know. I wonder sometimes why that's the case. I don't want to make any assumptions that it's just all for the marketing and there's really no utility behind it. But, you know, I know like the Starbucks program, I believe that was canceled. I don't know if that had any legs. A lot of people got excited about that when Polygon and Starbucks partnered up. But I don't want to beat down Polygon because the they've had it rough this market, and I still think that they can make a turnaround. And I'm just saying, I would love to see some of these partnerships actually play out in real life.
Yeah, I don't. I mean, I agree with you. I don't think anything came out of those, right? Maybe they're still working on it behind the scenes, but I think it was just a big marketing push there that nothing has come to fruition, at least not yet. So, but I mean, long term, I'm a firm believer that blockchain will be kind of in the background for every application. Maybe sometimes the user won't even know that blockchain is powering the application that they're using. So that's kind of the long term vision. But certainly these partnerships are with Web2 companies are a positive move towards that. But yeah, so far it hasn't seemed like any real progress has made to realizing that vision. It's mostly just been just kind of marketing ploy.
There is some bad news to share. Some of it is just bad news, and some of it is a little bit of drama. I'll start with the bad news. Is DYDX Consensys, they've been going through some layoffs lately, and it's kind of strange in terms of the timing of it all because it's end of 2024. We talked about October, and now we're in November, and before you know it, it's 2025, and that's really when the market this goes up. We're in this, if you believe in the whole like 4-year cycle, right? And so it's kind of strange timing why some of this is happening. With Consensys, I kind of understand because they're under some legal scrutiny, which maybe that'll subside a little bit once once we know who the president is. But, with DYDX, I mean, I'm wondering if some of this is simply because we're entering a new phase of the market and the type of personnel that you need on your team is just it's going to be different. You're maybe going away from the traditional engineers if you're a Web3 project, right? And you're maybe wanting to focus more on business development, marketing. You need to do more of that go-to-market strategy. So I'm wondering if this is just like a shifting of priorities versus, oh, we're doing really bad. We need to lay off, 35% of our people. What are your thoughts?
Yeah, both happened on the same day too. So it's kind of pretty interesting timing. But I think the big thing was, at least on the DYDX side, that was that their founder Antonio Giuliano, he had left for I believe 5 or 6 months, and then he recently returned to lead the company again. So yeah, I think he probably just saw, and I think while he was away, they actually had a pretty tough time. I think they lost a little bit of market share, and I think that he probably just saw some things that had changed over the last few months. Had some time to take a step back and just assess what was going on and realized that they needed to make some changes. There are no details on exactly like who got laid off or yeah, what departments got hit the hardest, but yeah, there has to be, there's just this, maybe there was this just seeing, like you said, a kind of a new environment they need to operate in, that the team didn't quite fit what he saw the team needed to be moving forward. So, but yeah, when you talk about Consensys, they laid off 20% of their staff, which is pretty hefty. I think it was almost 200 people. Again, don't know exactly who got what departments got hit the hardest, but yeah, I think a lot of those battles with the FCC, I think they're suing the SEC to support the fact that ETH is not a security. And yeah, I mean, I think legal battles will always be tough on the budget, and yeah, it looks like they had to make a move to make sure that they had enough funds to fight that battle.
That's the frustrating part about crypto, right? Because a lot of these companies that we're familiar with that are giants in Web3 are not giants relative to the traditional world. And so all
Yep.
they're doing is spending their money fighting legal battles. Like, it's just not fair. Where, at the end of it all, they're like, oh, okay, yeah, we'll just go ahead and drop this case. Meanwhile, they spent millions of dollars just trying to fight this case.
Yep.
So it's
Yeah.
it's definitely not fun for Web3. The
Yeah.
other
I think
part that
Well,
uh,
I think kind of like the probably the analogy could be like when Uber was earlier on and they were kind of battling with like the taxi commissions. I don't know how, can't tell you exactly how large Uber was when they were started fighting these battles, or Airbnb as well. Fighting with like the real estate, uh the the real estate industry. So like I think you can kind of draw parallels there with like, look, we're building something really innovative, and that ruffles some feathers, and yeah, you have to kind of keep in mind that you're gonna fight some legal battles to provide your pathway to winning some of these markets.
yeah, and something else that also is not a great look is you shared this with me, and I was trying to like follow along the story. This is like the part where I said is more dramatic. This is a very unique story that's coming out where I guess this is Hannah, and she was drugged by a partner at DWF Labs. And DWF Labs, for those that are not familiar, is they're a very reputable institution. They're a market maker. They're a VC, if I'm not mistaken. So they they have a very strong reputation in Web3. So, and then this story comes out. Drop us the details, Mike. What's going on here?
Yeah, just going through the tweet thread and some other things that were mentioned on Twitter. Yeah, so a partner at DWF Labs pursued a Web2 VC named Hannah, like offering her a job opportunity. And I think she was a Web2 VC and she was interested in getting into crypto. So she entertained entertain this guy, and while she was going, they were having a drink somewhere, and while she was going to the bathroom, he was caught on closed caption TV, um, you know, spiking her drink, and then he kept kind of pushing, asking her to go to his hotel room. I'm like, this is such a terrible look. Like, I mean, okay, I don't think this doesn't this only happen in crypto. Let's be clear, right? Like, this happens anytime when there's someone in like a position of power in any industry, and I mean, this is a terrible look for everyone. But especially for like a an industry like ours where there's just for better, there's scams, and there's just you know all the bad stuff that comes with this like kind of open permissionless industry. It's just an extra bad look for crypto, right? So I mean, this and also I think it's also a result of there being so many more males in crypto than females, that this stuff like this probably happens more often than is actually reported. And anytime this happens, like, it should be reported. Absolutely. Like, we shouldn't have to capture this stuff happening on CCTV for it to get reported, right? Like, it should be out there. It should get reported. So yeah, it is a bad look all around, and it sucks to be affiliated with, like, with stuff like this.
Now we reach the point of the conversation, Mike, that is my favorite part, which you come to me every episode with three different projects that have gone through a series of funding. And today we're going to start with Gelato.
Yeah. So Gelato is a roll-up as a service platform. They raised 11 million in a Series A plus round led by Hack VC, participation from Animoca, IOSG, Block Celery, and some others. So, Gelato streamlines the creation of rollups, L2s. They actually helped Kraken create their L2 Inc., which we talked about before. They want to be the kind of the go-to platform for anyone to launch their own chain. They make it very easy, and like we're talking about, there's going to be the thesis is that every popular dApp is going to have their own chain. And if that thesis proves correct, Gelato is going to be very busy and very successful, because they'll be able to help these dApps launch their own chain. I think they've been getting a lot of traction, and I think they'll continue with this with these trends of app chains in the future.
I guess we're still in this phase where infrastructure is still extremely important and gets a lot of traction in terms of the funding.
Yeah, I still think so, right? Like, I think both things can be correct. Where, yes, we need more apps to be built, and for consumers and end users, but also I think that there's still a lot of infrastructure that still can be built. And then, I mean, our thesis at Deep Ventures is that, like, um, maybe we're a little bit of past like the kind of generic L1s, L2s, and we need a little bit more use case specific infrastructure. But certainly, all that's grouped into infrastructure, and there's a lot of opportunity to still build better infrastructure.
And speaking of building, Citrea, I think I'm pronouncing it. So you can pretty much build anything on Bitcoin. What is that about?
Yeah, more infrastructure, right? This is an ZK rollup on Bitcoin. Citrea, they raised 14 million in a Series A round, led by Founders Fund, and Maven 11 Capital, Marana Ventures, and a bunch of angels also participated. Bitcoin. I mean, again, that's another area of focus for Deep Ventures, is the Bitcoin ecosystem. And there's they built a ZK rollup essentially on Bitcoin, and that development environment has absolutely exploded in the last year and a half or so, since ordinals were launched in about early 2023. And it is just Bitcoin has very interesting properties attractive properties for builders. There's it's obviously the OG blockchain with the largest market cap. So that's very attractive for builders to get there. If we can unlock uh, a couple of $1 trillion of Bitcoin, and with it, I think we can get people, instead of like miners, selling their Bitcoin, like they can stake it and get anyone could stake and get yield from it, but that relieves a lot of the sell pressures that miners create. So all this DeFi, all this infrastructure is being built on Bitcoin now. Whether you build an L2 like Citrea, there are many other L2s out there, or you're building meta protocols, directly on the L1 chain. There's a lot of design space there, and there's just a ton of activity happening in the Bitcoin ecosystem, and it's really exciting.
Yeah, and also around Ethereum too. For anybody that's thinking that, oh, Ethereum is dead, I mean, there's still projects out there that are raising, $30 million. I mean, that's a hefty penny there.
Yeah, I mean, like, there's anyone who says that is just they like they're gonna have egg in their face. Like, look, obviously, a lot of we've talked about a lot of like DePIN projects building on Solana, but interesting, right? Glow Labs is a DePIN project, solar energy platform. They raised 30 million. The round was led by Framework and Union Square Ventures, so two heavy hitters in the industry, and this is kind of another one of like they've already built these existing solar farms, and then now they're bringing a lot of that utility to the blockchain, right? So they reward solar farms on their network with GLW tokens, in exchange for their electricity output, and as well as they give them like USDC for the carbon credits. So a very cool energy DePIN on Ethereum. And they're going to use a big chunk of this to expand their solar farms to India. So more of that power getting onto into their network, and incentivizing it with crypto, which is what we love to see, having crypto be that incentivization layer across any use case in the world.
Last week I was talking to Patrick, who's a regular on my channel, and he was talking about the next move that he's personally thinking about after the whole bull market in 2025. And he's looking at energy because with this whole AI rise, you're going to need energy to power all of that
Yep.
AI solutions. And so he started looking at, where is energy the cheapest around the world, and even thinking, okay, maybe even from like a solar energy perspective. So along those lines, your article about Glow and their raise is coming at a time where I'm kind of putting the pieces together here and wondering, like, maybe solar energy is something that we're going to see a lot of traction around here in the near future.
100%. Like, so uh, Jensen Huang, the CEO of NVIDIA, was at a conference here in DC, and I asked him a question about that. I said, a lot of energy providers, when they have excess energy, will flip a switch and dedicate that energy to mine Bitcoin, right? Because there is a very liquid market there, and they can use that energy to be very profitable. And I asked them, I said, is there going to be like a liquid market for dedicating energy to AI, right? You got excess energy, flip a switch, and now you can use that energy to, power AI inference or model training. Um, he didn't quite answer my question to my satisfaction, but like, to think that that will, if that were to happen, it's going to happen on crypto rails, right? It's because that's where you get that liquid market. So I think there's going to be another um, intersection of crypto and AI in that like liquid energy market. So on top of kind of what you talked about with Patrick and finding cheap energy, I think on another layer you're gonna get integrated. Whether you're gonna kind of have optionality between, okay, using that excess energy to mine Bitcoin, or power AI model training or whatever you need to do with AI, but there needs to be a liquid market for that, and I think there will be based on crypto.
Yeah, tokenization of energy. You heard it here
Yep.
first, folks.
Yeah, if you're
Always
building it,
providing the alpha.
if
Always providing the
yeah,
alpha.
if anyone's building it, hit me up.
Mike, this was a great episode. Thanks so much for joining me as always. And for those that are watching, please consider subscribing, like this video, and we'll catch you guys in the next episode.
See you guys.